We've not really seen a significant increase in labour costs, despite the fact that the unemployment rate's come down, the participation rate now is going back up. So the Fed's not in any rush to tighten, but we do believe that tightening will come through sometime in Q3, more likely September than June. So that's our call. This is a probability distribution attached to our views around that first rate hike. What I should stress, though, is that even when the Fed starts to raise interest rates, we're still going to be in for a long period of very low rates relative to history.
China, we remain overweight this year again. We are more constructive on China versus the Hong Kong market. We think the Hong Kong market has got a couple of negatives to it. Property prices are high, there's more supply coming on, and the risk of rates in the US makes us a little bit cautious. We're not that negative on the market, we just simply prefer the Chinese market because we think there are more catalysts with rate cuts coming and reserve requirements. On the bottom slide with China, you can see that relative to emerging markets, relative to Asia, earnings have been pretty consistent, which is positive, and the market is rewarding earnings at the moment. And China is a cheap market. And very relevant to today, one thing that's really been fueling that has been China margin financing. Now the market is down hard this morning after the regulator came in and has suspended 3 of the main brokers from lending margin, from doing any more margin over the next 3 months. I don't think this will have a dramatic impact on the earnings of the brokers. I just think it's trying to control it, because you can see from the chart here things were getting a little bit out of order.
Emerging market currencies will be generally weak vis-a-vis the dollar, because we expect the dollar to be a strong currency. But China will be more stable than other emerging currencies. Having said that, our expectation is that there will be some weakness in the RMB, just as there was last year, and there'll probably be more volatility as well. I mean, overall, if you think about it in the trend of China's reform process, the expectation and our expectation, in fact, is that the currency will continue to be opened up. There is an intention to move towards the RMB becoming a reserve currency globally, and I think that process will be ongoing. So, more volatility, more two-way moves, potentially a wider band. These are things that fit with that process.